report. It is non-farm payroll. We have just shy of 1 minute. Let me get in right to it. Risk disclaimer. We know the deal. Social media, if you're following me, you know how to find me. Let's get into the trading. So I want to talk about Master Flex this morning. This is something I've been talking about all week in webinars. It's 8:30. The news is out. I'm going to take a look and see where the reaction is. I'm looking at the dollar basket. So right now it looks like we have dollar strength kicking in right away. I'm just going to let the news settle for just a moment, and we'll look to trade this. So, spread's a little bit wider. It's not what I want to see. I'm looking at pound CAD and Euro CAD as well. And it looks like that also has some CAD strength. So positive, possibly, out of both. I'm looking for the news in just a moment. I'll bring up YouTube page and say hi to everybody. But looks like we have dollar strength that is retreating. So quick jump to the downside on Aussie dollar, back up. So just let the noise shake out a little bit, and then we'll see if we have some flow. Dollar yen pump to the upside really quickly. That is about 20 to 30 pips, maybe 50 pips. All right, let's see what we have numbers wise. So 261 was 261 actual, forecast was 195. So that was quite a bit better than expected. Here we go. Let's get the update. So 197 forecasted, 261 came in. Unemployment rate went up to 3.7. Average hourly earnings up to 0.4 versus 0.3. CAD way better than expected as well. I'm not sure why these aren't green. 11K was forecasted, 108 or 108.30 came in, and 5.2. So big. That's a big jump. That's like, that's how Canada rolls. They just forecast and they have like 50 to 100K off. So anyway, we can look for some CAD strength this morning, and we'll see what the dollar wants to do. So let's have a look. All right, that gives me a moment here just to get logged in to the page, say hi to everybody. All right, good stuff. Benjamin's here, Larry's here, Roland's here, Ed, good morning. Tara, good morning. Donna, good morning. Bill, good morning. DPS, Thomas, what's happening? What's happening? All right. Tarek, thanks for posting that. John, good morning. What's happening? Okay. So, Aussie dollar, Euro dollar. So we have the initial break for some dollar strength. Pound US dollar continues its run to the downside. I said this yesterday actually during the pound news. Pound US dollar has room to drop down to like 1.1059, 1.1000. I said the pound CAD has room to get to 53, and it did. It was actually settling into 52. We went actually quite a bit through the target that I had planned for yesterday. Euro CAD, also a big drop to the downside. That should also help our CAD Swiss. So just on the other end, CAD Swiss long, looking pretty promising. That's a trade we've been running with for a little bit. So I do like that. See if I can get a little love here around 73.80. Okay, so 70. I'll do 7,300. I'm going to add a couple of positions on the CAD Swiss. 70. Right in there. Okay. So initially, dollar strength, you can see the kind of quick, noisy reversal. Just take a look at a chart and zoom in. That's a lot of noise to monitor right now. So I'll just let the indicators show up, pop up, be patient for a few minutes as the news kind of settles in. We can look for a couple of things. Let me bring up my drawing tool. If we have price turning green above this level, then we can look to get long. If we have price going back down to revisit these lows, then that's fine too. This is about a 30 to 40 pip move on the Aussie dollar right here. Let's just zoom into each one respectively. All right, Peter, good morning. How are you? Marty, good morning. Tom, good morning. All right, so if we turn green above this level, I can look for some alignments to go long. We turn red below here, or just revisit the lows. But I think we can certainly go more than 30, 40 pips on a non-farm announcement. Remember, next week we also have CPI data and midterm elections for the U.S. So not a shortage of news, that is for sure. All right. And apparently Benji wants to say hi. You might hear him in the microphone. Okay, give me a second here. Okay, 7380. Still gonna look at. I'm just gonna add a couple positions to my CAD Swiss. There we go. All right, so we've got green on the Aussie dollar. Not ready to jump in yet. I'm just gonna hang tight, just see if this is more noise. Euro dollar breaking down here. Haven't broken out the. This is the high from where the news started. So if this turns green, same thing, right? We get green above this level. I'll look to go long on euro dollar. And let's see here, pound US dollar. Quite a big recovery on pound US dollar. It's still in the sell zone, but again, I'm not going to deny it if it turns green. Looking for this to go the opposite way, a little bit of a squeeze on the dollar, kind of an opposite move. New Zealand dollar making a nice little run, so that's already turned around pretty nicely. All right, so Kiwi dollar is looking pretty encouraging. Aussie dollar probably looking pretty encouraging. Well, I know that we had Asian markets overnight doing really well. I think there's like a 5% jump in the Hang Seng. Market watch. Take a look at Asia markets. No, we'll go back to right here. Asia markets. So Asian Dow of 1.14, Hang Seng up 5.36%. That's a massive jump for the day. So that might get a lift, give a lift to the Aussie and the Kiwi. All right, let's take a quick look. It's 8:36. Let's get a currency strength chart update. We're getting a big jump on the CAD, Aussie, New Zealand steady. All right, so let's have a look. I'm going to wait for this. I'm going to look to see if I get into the buy zone here and look for a little follow through. So I like the New Zealand US dollar right now. The Aussie dollar's up as well. Okay, those are going to be my kind of two primary focuses. Dollar CAD. Dollar CAD is probably staying bearish. Yep, look at that, man. So kind of a reversal on the dollar move. Even though the dollar news is great, I think dollar CAD looks pretty good for this. We pull back into this is the initial news break low. If we can pull back into my little short-term ribbons and look for some resistance, I'm going to try to sell the dollar CAD. Okay, so dollar CAD I like, Aussie dollar I like, New Zealand dollar I like. Dollar yen, I'm just going to stay out of for right. I mean, I have positions on the dollar yen. That's something I'm holding position wise short. Euro CAD, pound CAD are pulling back. Let me take a look at those on the higher time frames on my MetaTrader 4 chart. Pound CAD. Pound CAD I could see pulling back just on the day. A little bit of. I mean, that's a big move for this week already. We've made a move about 460 pips in the last 2 days on the pound Canadian. So that makes me happy that we closed that out around 5,800 because now it's at 5,200. Anyway, so we were positioned pretty nicely on that pound CAD. All right, so let's see if we can get a little trade here. So Aussie dollar is looking pretty good. Look for some follow through. New Zealand dollar, I'll look for some follow through. All right, what am I looking at measurement wise? If I got in long New Zealand dollar, about 22 pips. All right, I'm going to take a trade. So I'm going to get in long right here. And stop loss, if we come back below these ribbons, I will get out. So I'll turn this to red. Okay. And this might be somewhat premature, but I'm going to take my chances on a small trade. So this one, I mean, the stop area is going to be down here. And I'll look for some follow through, current price, turn this to blue. So I think what I should do here is I might end up taking kind of the opposite trade, where if I go long Aussie dollar and long New Zealand dollar, I might want to go short euro dollar and pound dollar. So if that way I get a winner and a runner today, then one of those will play out. So I'm gonna wait on the pound US dollar. I'm gonna see if the pound US dollar will get me back into the sell zone. If it does, then I'll take that sell trade. And same thing on the euro dollar. Now, if I'm wrong and euro dollar goes up and pound dollar goes up, as does the Aussie and the Kiwi, that's fine because those are going to be running for profit. But I'm going to look to see if I can confirm a sell zone and have kind of a bit of a hedge, meaning that if dollar strength, if it's noisy and it returns to dollar strength, where we had strength in the dollar, weakness in the dollar, and then strength returns again, and this just might be that kind of a noisy news shakeout where traders that like to come in and try to straddle the news. This is what happens. They get filled here, they get filled here, and then everyone is wondering where do I do? That's why we just kind of wait and let it settle. So I'm going to look to see if I can get a sell zone confirmed on the euro dollar, and then I'll be long Aussie dollar, long New Zealand dollar, and then short euro dollar, pound dollar with confirmation. And these, if I lose on these, they'll be losing quickly. If I win on these, I let the profits run, and I will try to walk away net profitable. Any questions on that? So I know that this isn't the typical like review everything Pulver report, but this is trading, right? All right. So let me monitor these. So there's my Aussie dollar. Here's my New Zealand dollar. Just going to monitor those levels. Euro dollar, pound dollar. Where are we at? Here's euro dollar. And if we turn red again through this ribbon, I'm going to take a sell trade. So it'd be somewhere in here. If I see some confirmation, I'm looking to sell it right in this area with some confirmation. So it's not there yet, but euro dollar looking for that area, and pound dollar looking for this area right below this ribbon around 1.1183. Okay. All right. So a little action there. Yeah, stop losses, Lori. So the stop losses are here. I'm only in 2 trades right now. I'm in Aussie dollar long. Stop losses right below my sell zone. So I have it just below these wicks, right below my little ribbon sell zone at 63.70. So it's about a 20 pip stop on that Aussie dollar. And the New Zealand dollar, pretty similar. I got in near the high around 58.44. My stop loss is around 20, so about 24 to 25 pip stop. So I mean, I'm trading 1 minute charts, so I shouldn't have anything more than like 30 pips stop loss wise. I mean, I think yesterday the pound crosses had like 30 to 40 pip stops because it's a little bit more volatile, but usually we can be pretty precise with less than 50 pip stops. Okay. All right. So that's going to be my focus right now. I'm looking at Aussie dollar long, New Zealand dollar long, euro dollar. If we confirm short, I'm going to get short. Pound dollar, if we confirm short, I'm going to get short. And so again, I'm just thinking through this like it's going to be a hedge. That way, if I lose on the Aussie and lose on the New Zealand, I can still be right with euro and pound because I'm not trying to trade the dollar basket all in the same direction. And the goal is to walk away net profitable, right? Okay. So I'm just going to hang out for right now. Euro CAD, pound CAD looks like we're retesting those lows. Let's see. I'd like to see, man. It's just a really quick pullback. I want to see if I can find the ribbon. We might still find this actually. So let's see if we get a little bit of this. If it consolidates and the ribbon resistance hits, then I might look at another sell trade on the Euro CAD. Pound CAD, same thing. Those would move pretty similar. But I'll just hold off on those for right now since we had a big jump initially. All right. And I'm going to zoom in right here. So here's my pound US dollar. If we get this red candle to close below around 1183, I'll take that short position. Euro dollar, if I zoom in, if we close below around 97.80, I'll look to take that position. So that would be short euro dollar and short pound dollar. Okay. All right. While you're at it, hey, nice little turnout this morning. If you're at it, if you have not subscribed to the channel, take a moment to do that. Just click that thumbs up button to like the video, and that big fat, now it's a black button for subscribe. But I would appreciate it. Helps the channel a lot. And mixing things up a little bit. So also, what you're seeing here, this is a nice little strategy I'll be talking about today at 1 p.m. Eastern time. I have a full class on this, the dashboard to the indicators. And this isn't the only thing we do. We don't just trade 1 minute news. This system is how I like to trade the markets in general. So visually, it's a super friendly system, easy to find trades. And this directional dashboard is using a higher time frame so I can go with the safest and strongest trends. There's full customization with all these different indicators here. So I focus on, all four of them together is my alignment, but I can also have, my overall sell zone, overall buy zone, and then get a nice precise trade with these final two, this Trend Finder and Hekinashi. Those are two of my favorites. So anyway, that class is today at 1 o'clock if anybody's interested. If you have any contacts at market traders, educational specialists or coaches at Market Traders Institute, they can get you in that class and get you slotted here on Smart Trader to get all your bells and whistles. But that class is at 1 p.m. Eastern time today. Okay, Aussie dollar. We're in profit here. New Zealand dollar's back up towards the highs. I'm going to stand my ground. I'm going to wait and see, if Aussie dollar and New Zealand dollar pay, then I'll just take profit on those. So I like the idea of just the hedge. So if I'm right on this pair, fantastic. I will probably just not overtrade this morning. And if the pound dollar goes up and the euro dollar goes up, that's fine. But I wanted to kind of use those as a potential protection in case I'm missing on the other trades. But right now in and up about 10 pips on the Aussie dollar. And right now in New Zealand dollar, this was actually a pretty terrible entry. But if we break these highs, this one's up about 5 or 6 pips right now. So I'll keep watching. Dollar CAD to the downside, dollar yen, hopefully lots to the downside. And then I'll keep an eye on this Euro CAD, Pound CAD as well. We might have a little sell trade. If we can pull back into the ribbons on both of these, I would consider a little sell trade if it's worth it. So let me see if there's room. If we have equal highs and we push back to the lows, that's about 30 pips. So I think that's worth exploring. But I want to see if we can hit the ribbon first. So looking for a little dynamic resistance here on Euro CAD, Pound CAD. Aussie dollar's up, New Zealand dollar's up. Euro, you can see here the euro dollar turned green, pound dollar turned green. If you're following the alignments, this would be the trade, right? So we have our news initially, let the noise settle. We reverse colors, so now it's in the buy zone. We get a pull back into our ribbons. Buying this candle or buying this candle would be fine. The stop loss would be here. So if you're just following what you see, this would be long pound US dollar. You could be buying, like I said, right around 12.10 or 12.20, and your stop loss would be right below this ribbon. So you're looking at about a 20 to 30 pip stop on that pound US dollar. If you take that long trade and follow the colors, euro dollar pretty similar. News fake out, news noise comes up into the buy zone. You get nice confirmation here on 98 to 98.05. Now you're up about 8 pips, stop loss below, risking about 20 pips. But here we go. So Aussie dollar's up, New Zealand dollar's up, pound US dollar. Yeah, so we're getting some nice dollar weakness right now. It is 8:47. Should have a couple of updates on the currency strength. So here you go. Aussie strength, CAD strength, New Zealand strength. Everything else is neutral. Dollar's down. So it's a pretty good play right now. What are we in? We're in New Zealand. We're in Aussie. Dollar CAD, I could be short. Let me go back to that dollar CAD for a second. Again, dollar CAD, I'm not going to chase this, right? We didn't really have a pullback. What I'd like to see is this. If we pull back on dollar CAD, this ribbon can catch up, look for some dynamic resistance, then we'll look for a sell trade. But it's already, this is the one that we had some follow through initially on. So some 36. This is wow, that's a pretty good poke. That's 100 pips already. But I am, position wise, I'm actually already short on the dollar CAD. So that hopefully comes back into, I'm looking at like 3,200, 3,250 on the higher time frames. All right, seriously, like who's up with the scammers? Like, get the hell out of here. So annoying. Okay. All right, any questions, any comments? So far, so good, right? So up about 20 pips on the Aussie dollar. Right now, a little pullback here. It was up at one point, up about 15 pips on the New Zealand dollar. See if we can just keep breaking these highs. We can look for a little support. This isn't done in the pound US dollar. So if I have these there's in this case buy zone ribbons. If we get a little bit of a pullback, I can look for another support level to go long. Same thing on euro dollar. So if we stretch to a new high, that'd be good. If we make a new high, we get a pullback. I look for these ribbons to catch up and see if I can get a buy trade in here. But as we push higher, hopefully Aussie and New Zealand just continue to run. Okay, Gail, thanks. I appreciate that. Watchdog, yep. Pound Aussie has been tanking. It has been, yeah. I think, look, Pound Aussie. We talked about that one yesterday. During the Pound news, number one, we are looking to sell that thing back up at 8,200. It was just shy of that on the higher time frame. So unfortunately, we didn't get the 8,200 fill, but we were short yesterday. And there's room for the Pound Aussie to come back into like 73.50, possibly even retest, 71.50, 7,200. So I think Pound Aussie has some room to drop. Pound CAD's already dropped a ton this week, and that's actually good because I'm glad we closed it out around 57.50 to 5,800. We're pulling back into the kind of inefficient, flash crash swing that we've had since that low at 4,100 or 4,000. And if Pound CAD settles into like 48, 1.4800 or 1.50, I'm going to start looking for a short-term bounce on that. So anyway, yeah, but the pound's been hit pretty hard this week. It was another kind of dovish rate hike, right? They raised rates to 4%. That was a 75 basis points hike, and they said that looking like a 2-year contraction. So I mean, it's interesting how central banks are like kind of being honest with the markets, and the Fed is just like, yeah, we're not going to say anything other than we're just going to raise rates. The Fed it refuses to acknowledge a recession. I was just in a podcast webinar last night where it's like, yep, I don't see a recession. It's like, how do we not? I mean, everything is contracting. Tech is cutting jobs like crazy. There's contractions. There's forward guidance that's garbage right now. It's like, it's not good. So anyway, I mean, we have ISM numbers that are flirting with the 50 level. We have PMI numbers that are flirting with the 50 level. We just have all these like right on the cusp. But the reality is we have two contracting GDPs. So we technically have a recession. We have 2-year rates going nuts. So anyway, I mean, I just don't think the Fed wants to acknowledge what the reality is, which is, they're scaring the market like crazy. They're raising rates to a point where it's going to be restrictive and try to hamper growth. But, that was yesterday. So today's a new day and we're trading it, right? That's awesome, Peter. 1,700 pips is fantastic. You're killing it, man. I mean, I see a lot of 1K clubs every week from you. That's awesome. Congratulations. All right. So where are we at? I might just grab a few pips here. So that is 90 to 12. That's up 30 pips, 32 pips right now in the Aussie dollar. And let's see, 45 to, I'm up about 10 pips. So I could grab about 40 to 45 pips net right now in the morning. I think I'm going to go ahead and do that. Or at the very least, again, if I want to let this run a little bit, here's the risk, and this is always what I toy with when I'm trading like this. If I'm day trading or scalping, if I just do this with my stop loss, right? If I just move my stop loss +1, I'm doing it on my phone. If I go to +1, number one is the risk is gone. I don't have to worry about the trade, and I can let this thing run. But if this comes back and stops me at a +1, I'm sitting here at 30 pips positive. For a morning like this, it's better just to take the profit. Just take the 25, 30 pips, or lock in 10 or 15. Like, give yourself something to walk away with. So I'm gonna grab the pips right here. That is up around. I'm up about 30 pips, 29 pips. Yep. All right. So I'm gonna close at 29 pips. All right, 29 pips. I'll take it right there. And my New Zealand dollar, it might be less than 10 now. There's 44. It's hanging in there. So this one, maybe give it a little bit of a chance, but I think I'm just going to take the 10. Yep, I'll take the 10. All right, it's up 10.2. All right, 10. 10 pips. So what's the little walkaway prize for this morning? 10 pips on the New Zealand dollar, 29 pips on the Aussie dollar. So 39 pips in the morning. And again, I certainly could have had more if I wanted, but like I said, I talked myself into a little bit of a hedge just in case. Some of these news events can be noisy and fake outs. So just in case this returned bearish, I would have been willing to take the loss in the Aussie dollar, get in the pound US dollar, and ride this back down to the lows. Probably, this is what I would have done. I would have taken a bigger trade size. So I did on the Aussie dollar and the New Zealand dollar. Those were 0.10 lots. If I lost on those trades, I would have gotten in with a 0.20 lots on the pound dollar, euro dollar. And if that took me down to the lows, I would have had to have made half the pips to make my money back. And I think I would have finished, the plan would be to finish positive on the day. But I didn't have to take that hedge, which was nice. And I could have just followed the basket, of course, but that's hindsight trading, and I don't like to do that. So I'll take my profit, take my 39 pips on the day, and call it a day for that little session. Okie dokie. Peter says for the 1 minute strategy, there's an optimum time of day. No, there's not. No, because that stuff is so inconsistent, man. I mean, I feel like we've had this conversation in the flex trading room before. Look, I used to run the London session. I used to get up every day at 2 a.m. Eastern time and trade the London session, the Euro Open, and look for it. But sometimes the London session delivers right at the open. Sometimes it delivers an hour into the open. Sometimes it delivers late in the morning. It's like, look, 2 o'clock in the morning is not a normal function for me, and it's normal. It's not a normal thing for anybody. So unless you're going to tailor your day to it, it's like, look, I've traded it for years, and at some point you just see like it's inconsistent. There's generally volatility there, but the right at the open, it's so inconsistent. So I'm not going to wake up at 2 or 3 in the morning and be a living zombie through the week, just to try to trade some volatility that might happen at 3 a.m., that might happen at 5 a.m., that might happen at 6 a.m. It's like I might as well just trade the way that I trade, which is live a normal life, get some sleep, and trade when I can. So I traded yesterday. Pound news was at 7 a.m. and we took our session at 8:30. We had plenty of time to get in and trade the volatility. This was 8:30. We jumped right in, grabbed a few pips. I mean, that's fine. I don't always look to scalp and day trade like this, but it is possible around these news events. Next week on CPI news, I'll look to do the same thing. Next week in the midterm elections, that's going to be a whole evening. So I'll be setting chart alarms. That's more of a bigger position. That news runs all day, right? So, yep, pound dollar taking off. Good. I mean, look, it's good. I mean, at the end of the day, I mean, this is what I'm also looking for. So I'm going to close things down trading wise here. So that's good. I'll grab my 39 pips. Pound dollar, US dollar, or euro dollar. I mean, again, the trade was right here. It's like, don't chase. Let the market do what it needs to do. If it's going to drop and it pulls back into the ribbons and sells off, that's an easy trade. But it was to the downside, faked out here, reversed, and then you have a pullback and you buy confirmation right here. So I have, green on my candles. I have a bullish Hekinashi candle. My stop loss is nice and tight. There's my precise entry. And you're sitting here up around, 20 to 20, 25 pips. So it's not difficult, right? It's just trade what you see. And even on, crazy news events and high volatility, you can still just let price flow, find some good movements, and off you go. We're actually going to see some new highs right now. So, and again, I said this is always the thing that traders will struggle with. I do the same thing. Now, I could take my profit like I did and walk away, or I can take my stop loss and go to break even or better and let it run. Obviously, right now in hindsight, it's like letting it run would have been the right choice, Chris. Now you'd be up 30 pips. Now you'd be up 35 pips. Correct. But I closed it out. I'm not going to chase it. I'm done trading for the morning for this. I'll grab my bucks and walk away. That'll buy my coffee today that I made in my Keurig. Okay. But Peter, for your question, I mean, like I said, I know you're in the UK, right? So it's normal time for you, but I would look for the London Open, so the 8 a.m. UK time. I mean, that's typical, but it's just not always there. And that was the one thing is I'm not trying to get myself back into a habit of I'm gonna day trade every day. It's like I don't want to do that. The markets are not that generous every single day with volatility, right? Now, my point is why are we seeing dollar weakness? Because we should. We should see dollar weakness, right? If we go to the dollar index for the last several months, well, let's say for how about an 18-month trend since January of last year? That's part of it, right? And the last 4 or 5 trading days, the dollar index has been pushing up. But what I think is pretty interesting here is we're making kind of this correction on the dollar index right now. And today's non-farm is, preventing us from going higher. Because originally, going into this week, I'm like, well, if the Fed's going to keep driving the dollar and kind of breaking the market, then we might come back and retest this high, or we might break the market up here at 120 before the dollar index really drops. And that's how the market can price in the rates and price in the Fed pause and stuff that comes in March next year. But anyway, if we return back down to this level, if we can somehow take out this low, this 200 EMA is really a possibility, maybe by the end of the year. So we'll see. Um, one thing I think needs to happen. One thing that needs to happen for next week, if you're paying attention to the news, let's go to this week. Let's go to next week. So let's do next week. So next week we have midterm elections for the U.S. on the 8th. That's going to go all night on Tuesday. On Thursday morning we have U.S. CPI. All right. CPI news for the last several months have been massive, massive news events. So the stock market's moving like crazy, overreacting in futures before the opening bell, right? This is 8:30 a.m., so you have these big pre and post market moves. Well, actually pre-market moves. So futures does a lot of stuff right ahead of the opening bell at 9:30. So that'll be a big one. And so here's what I was going to say: if we're going to see any rally, right? If we're going to see any stock market rally for the rest of the year, I think that the midterm elections plus the CPI combo can help like put that in motion. But I don't know what direction it's going to be, right? In order for the dollar to get weaker, if we're going to see a weaker dollar and a stronger stock market rally to finish up the year and take us into the holidays, I think this CPI data has to surprise us to the downside. Okay? I mean, they're already forecasting, core CPI at 0.5, CPI month over month at 0.7. Remember, you have the year over year and you have the month over month. Yes? So if we have and I'm not talking 1/10 of 1%. I'm talking like 0.3, 0.5. I mean, I'm talking like a big surprise to the downside, meaning that this CPI misses. If we have a big miss on CPI, I think the market gets pretty excited. I think the dollar starts to realign with some of the technicals. It may not do anything that the Fed wants to do, right? The Fed really doesn't want to see the market rally. Because if it does, it just means it stokes inflation and puts all this money back to work. This draining M2, this draining money supply, it's still in the system and it's going to go to work somewhere. And I'm wondering if that's U.S. markets. It's certainly this switch from U.S. tech into probably U.S. industrials, probably U.S. Financials, U.S. energy, right, or energy stocks. But if there's any chance that the market's going to rally, the CPI data has to improve and probably improve in a big way because we're only seeing this once a month, right? So between PCE, CPI, we have to have way better than actually, I'd say it's weird to say we have to have way worse than expected data, but we do. We need to see that these numbers are coming way down and coming down faster. Because right now it's like here's the chart. If you look at the month over month inflation, let me go back to the charts here. What's going on? So, yep, there's our run for the day. There you go. So, yeah, 89. That'd be up about 40 pips right now. Kiwi dollar from 10. This is up about 30 pips right now. So, yeah, I botched it a little bit. I'll take 40 pips on the day, but it certainly was 70, 80 plus. Was up for grabs just by being patient for a little bit longer. And again, do I trade what I see? Sure. Did I have any reason to get out of the trade? No. I mean, if again, just this is what I'll teach. This is what the system is for. If I just use my Hekinashi right here and just let it trail, I'd be locked in for 30 to 40 pips right now, and there's no reason visually to get out of the trade, right? I want to get a little bit tighter, tighter, tighter. That's fine, but I'd have 30, 40 pips of flow in my pocket, right? I mean, it's pretty nice, right? Visually, it's really easy to follow. It's pretty smooth. Get a buy trade in here at 03 or 08. It's up to 50. That's up 50 pips right now in the euro dollar, and you can be trailing up here to 31. So yeah, pretty easy stuff. Yeah, so am I, Nimmer. Nice to see you, man. What's up? Yeah, I'm long New Zealand dollar. Yep, I see it. I mean, there's a nice level back at like 61 on that Kiwi dollar. I like that trade. Let's see here, 222. Yeah, I like that trade a lot. I think there's room. Again, high bar counts on a lot of these daily charts, and technically I'm looking for a weaker dollar. So UK oil. Oh snap! That's what? That's a huge jump. Oh boy. All right, so this is Brent crude, 98.40. Wow, that's a big jump. What's US oil doing? Okay, so we have a huge jump in energy this morning. Interesting. All right, XLE. Pre-market's way up to 92.32. I'm going to take a look at those calls. We had a 11.25 $95 call. We closed it out for 100% profit. We got in for like 80 cents, closed it out for $1.75. I don't think it's going to be worth as much because of the time factor, but still, I mean, we're just seeing energy prices pushing higher. Yeah, that's a big jump in oil. I mean, what's that percentage-wise today? We haven't really seen that type of activity in a while. It's up 4%. U.S. oil up almost 5%. Wow, that's a huge jump. So how does this translate into stocks like SLB, pre-market up a couple bucks? Halliburton, just taking a little meander. Halliburton 36.86, no pre-market, but hopefully higher. BKR, no pre-market, but hopefully higher as well. CTRA, CTR. I wonder if we had earnings on CTR. Pre-market at 28. That's down a couple bucks. That must have had a miss. How about REI? REI's at 310. Rig had a big jump yesterday. I saw Rig was doing pretty well. Rig's up to 435. I've got this one looking to get called away at 450. So anyway, yep, good stuff. Trailing by 30. Let's see how high it goes. Yeah, I'd like to see the Kiwi dollar up towards 6,100, maybe even 62 and change. I think that the Kiwi dollar can challenge. So we go back to this recent high here, right? We have this high, we have this high. I think we can challenge that high. Now, I'm not saying break it. If we break it, then all of a sudden we're putting in what looks to be a pretty nice bottoming formation. But I think we can rally to this level. There's some past support. I think we can rally up to this, automated trend line resistance, and we can challenge around 61 or 6,200. So I think there's some pretty good upside there on the New Zealand US dollar. Also, if Asia's getting a big lift, I mean the Hang Seng was up. Let me take a look at stocks like Alibaba. Right, pre-market at 71. We have a $5 or $6 jump on Alibaba. What's the other one? KWeb and FXI. 2281. So we're getting some decent jumps here on Asia stocks. So I'm not sure if we're seeing a loosening in COVID restrictions, which would certainly help Asia. So we're getting some pretty good pre-market movement on some of those China stocks. Yep. Daniel, yeah, I did. Yep, I'll take a look at those. Thanks for sending those to me again. Yep, I'll take a look at them. Okay, so just reviewing everything at a glance. Like I said, just driving the thoughts home before we wrap up the session. We don't have to sit here and trade very long today. Mission accomplished. Job well done. Pretty decent run, following the flow. Just this is why we don't jump in right at 8:30. It's like you have this knee-jerk reaction. It's like I'm jumping in. It's like don't just chase. This system right here, the Masterflex, is precise enough and quick enough that if this was going to go, lower, then you should be able to find some resistance here or see some structure like a bear flag. Case in point, the dollar CAD was the one that jumped and started going straight down. Let me see if we could have found. Where's my? Wow, look at that turnaround EuroCAD. Ooh, baby. So yeah, this was a nice little pocket trade. Pocket trade turns green. That worked out pretty well. Now, like I said, I was looking for this to come back and find the ribbon, but the way that I would take the trade is we get the sell trade, we get the initial break. You find the ribbon resistance. Now that if you sold it because it's like, oh, Chris, it's red, you can sell that there, but your stop area is pretty tight. And as soon as this turns green and this Hekinashi's bullish, you get out of that trade, reverse that position, go after this pocket, and you're getting that move. Again, this is trading. You got to be willing to cut off losses quickly. So get out of this trade with a small loss and get in long, and there's your run right back to that news pocket for about 20 pips. Pound CAD's going to do the exact same thing, right? Look at the pound CAD. So break here, pulls back to the ribbon. You notice that we hit the ribbon, but we don't break and go lower. So if you wanted to sell it in the ribbon, that's fine. But as soon as this turns green and the Hekinashi's bullish, you get out of that trade quickly. You go with that long, you fill that pocket. There's your 20 pips. You just have to wheel, and this is why you keep trade sizes. If I traded a mini lot and I lost, and I traded 2 mini lots and I win, I can lose 10, 15 pips on a mini lot and then win 20 pips on double it, and you make money. So it's just being nimble. Trade size helps, precision helps, and just trade what you see. It's pretty good stuff. Nice. Euro dollar for 80 pips. Fantastic. What's going to break? What will be the Fed pivot? There's no such thing as a pivot, Craig. I'm telling you, man. You asked me that before. There's no pivot in the Fed. It's going to be a pause, right? Pivot is not in the language. So, in my opinion, it's going to be a pause, and it's coming in March. So, what I'm curious of, and this is what happened even with FOMC. The rates were raised on Wednesday. The Fed now for December, it's about 50-50. The market's not even sure. It's going to be a 50 basis points hike, or is it going to be a 75 basis points hike? It keeps going back and forth. So obviously they're looking at raising rates in December. They're looking to raise rates again. Let's say they raise by we're currently at 375. So if they raise it by 50 basis points or 0.5%, we're here. If we go to February, we're looking at another 50 basis points. So even if they go 50, 50, they might do another 25 in March, but it's at this point. From March to the rest of the year, there's no increases shown in this watch tool. So that is where the pause is at. I think the only way the Fed pivots is if something breaks. And we talked about that this week in Flex. And my breaking point would be this. If the breaking point is looking at something like the long-term bonds, right? I mean, look at this. TLT is down to 95.15. This thing is just cratered all flipping year to the downside. If we see this correlation, which again, this will be interesting. If somehow the bond market keeps dropping, but the stock market rallies, then it's actually fine. I mean, that's your typical negative correlation where if you have risk appetite, your bond market's your safe haven. If the bond market keeps going lower, but equities is rallying, I'm looking to see what the yields are doing. And I'm telling you, you have to watch the 2-year yield. You know, if you want to see any type of significant move to the downside in yield, and if you get it here on the 2-year, for example, this is your best chance. If the 2 years dropping here takes out lows, and we start correcting, if this 2 years dropping, I'm looking for a bottom in equities. That correlation is so strong right now. But I do not think the Fed is going to pivot. Okay. I think they're going to pause, but the reality is they're going to be higher for longer. And I don't know if the market likes that or not, right? I mean, by March of next year, there will be no more rate hikes. That's what it looks like. But they're going to stay at whatever rate they get to. So if they're here for another 50 basis points, another 25 basis points, that's a 1.5% increase over the next 3 rate decisions, right? So that'd be 1.25 to 1.5. Depends on what happens in December, really, to 1.5. And so that would bring us up to around, 5%, right? 1.25 brings us to 5%, and 1.5 brings up to 5.25. So that's pretty much where the market is expecting the peak. And what's interesting is looking at that 2-year. This 2-year had one of the biggest moves that I've seen in a while. Take a look at that spike. The 2-year spiked to 5.15. Is that enough? And I actually said this several weeks ago. I said that if we're going to have to see, the Fed at 5+%, does that mean that our yields actually have to get to 5+%? And if they do, typically the yields lead the way. So if the yield peaks here at 5.15 and it starts to drop, there's usually that lag where the yields lead the way and then the market will find its footing. And just based on the timing, we have midterm elections and other stuff. I'm saying, like, it might be irrational, right? I mean, traders out there that are being like so bearish, it's like, I get it, man. But in the short term, this market might find a way to just rally till the end of the year just to save itself. I mean, it doesn't feel good to have the market down 27%, right? So here, I mean, look at this. Pre-market, we have a $5 gap. We're 18 minutes away from the SPY open, right? We have a $5 gap to the upside. Well, this is interesting. So I have a chart alarm here. I have a chart alarm here. I want to see what this market does. We have a long call on the Qs. We have a long put on the Qs. We're going to see what happens. Amazon is getting its butt kicked. Big, large tech is getting its butt kicked. There's a massive shift going on from all that money getting dumped into Apple, Amazon, Google, Facebook. That money is coming out. That money's going into other stuff. Could be more boring stuff. Could be industrials. Could be defensives, right? Way less volatility, better dividends, cash flows, stock buybacks. But I think there's clearly this exodus from tech and now it's like the final straw. We've seen a massive exodus from things like Peloton and Zoom and DocuSign and all this crap for COVID. But here we are looking at like all the major tech companies that are losing, right? I mean, Meta does not look good at all. I mean, I dumped a pretty large position of Meta once it broke through $100. I still have Meta shares that I'll keep for a while, but I scaled back a lot of my exposure, and I'm not trying to call the bottom. Okay, Never think rate will be 6. I don't know, man. I don't know if there'll be. I mean, 6% is a lot to ask because we would have literally the public debt at 6% would be the largest line item on the balance sheet for the Fed. I mean, I don't know. I mean, is the Fed trying to become Japan? Is the U.S. Central Bank trying to become Japan, where we just spend 200% of our GDP? I don't know. So anyway, look, I think 5.25 is about what the market's anticipating now. If somehow the Fed keeps, stepping on all the hopes and dreams of the bulls, then maybe it's at 5.5 to 6%, like you said. But that's a lot of debt to service. If we see mortgage rates continue to climb at 7+%, you're still going to squash real estate. You're going to squash consumption. You're going to make everyone fearful that a recession is right around the corner. And at the same time, this is what the Fed wants, right? This is one thing that I almost wonder if the Fed doesn't want to see a market rally, because if money is going back to work and getting relevered, this rally right here just stoked inflation fears once again. CPI data was super sticky. So, today's a day of trading, but next week on Wednesday, Thursday, what's CPI give us? Midterm elections on Tuesday, CPI data on Thursday. I mean, again, chart alarm here, chart alarm here. The market's trying to save itself from coming back to these lows. If it can, great. If it can't, then I'll be fine. I'll be short. That's fine. Take this down to fair market value and pre-COVID highs at 340, but I'm still looking for something like late this year or Q1 of next year. That's like there's just money that wants to go back into the system. So anyway, that's that. So I know it's a little tangent, but how we do today? We have some fun. It would have been nice to just let this run a little bit longer and be up about 40, 50 pips instead of 30, but I'll take my 30 pips. Meanwhile, I mean, I'm Kiwi dollar long with a bigger position. That was just a little non-FIFO scalp today. Aussie dollar, I'll take that. Pound dollar, I'm still positioning long. I was trying to get a non-FIFO trade on that one. And then euro dollar, I'm still long as well. So position-wise, doing fine. Dollar yen, nice little move on dollar yen to the downside. Pleasure to see this one dropping about 50, 60 pips and hopefully another 1,000 pips to the downside. And then dollar CAD, this one was just following, you know, I'll say this is a tough one because it just dropped so aggressively that it really would have been okay. So everything's moving, dollar weakness, right? So this would be if you're just taking a trade, you follow red and you put a stop loss right above the Heckinashi or right above the ribbon. So there's still a way to justify getting in the trade. It's just, have a little bit of flexibility. Know how the system works. So yeah, a little sneak peek of Masterflex. It's fun. And if you'd like to join me, I've got class today at 1 o'clock. So um, if anybody, I mean, if I've got people that are watching that are not market trader students or market traders clients, you could send an email to, uh, I think it'd be, well, if you don't have an educational specialist, you could send an email to this website right here, account reps at markettraders.com, and just the email could be something about Masterflex, or the subject could be Masterflex, and say that you saw it in the YouTube session today, and you can get signed up for class day at 1 o'clock if interested. Okay. So on that note, any questions before we wrap things up? I think I deserve a little coffee break, check things out, see some pre-market movements, and class at 10 o'clock for Equities on Demand. Class today for Masterflex at 1, and TGIF. It's been a long week. So I think this will be my 30th live session by 2 o'clock today. So I'm ready to rein in the weekend, and I'll still be doing a little bit of work over the weekend to finish up some more stuff. But anyway, yeah, good stuff. And if you would be so kind, with the 80 plus people watching the live session, hit that thumbs up button for me, please. And thanks for watching, and subscribe to the channel. Keep this thing growing. And have a great Friday, great weekend. Those of you that are in my class at 10 o'clock for Equities on Demand, I'll see you then. For those of you that are in class at Master Flex or want to get in the class, I'll see you at 1 o'clock today. Yep. Dollar yen, yeah, dollar yen's looking good. Dollar yen to the downside, I want to see it. I want to see a lot of it. Dollar yen. Again, I keep looking at it. Chart alarms are set highs and lows. So what do we need to see out of this? We need to see it break the lows, period. We need to break this 50 EMA on the daily. We need to start making our way down to these 200 EMAs. That's it. Like, that's what I'm looking for. Now, I realize that we could still be sideways, right? This could be this big topping area, and maybe this is waiting in limbo with, like, the risk on rally. If we have a risk on rally, then perhaps this drops based on the dollar. That's the thing, is like the yen and the dollar have been kind of pegged together, and I don't like that. We need to see a disconnect between the yen and the dollar. So hopefully this is just a big dump in dollar holdings, right? It's been a crowded trade. It's time. It's not necessarily guaranteed overdue, but if we stretched up into this area, I am just shorting the crap out of the dollar. But if we can correct in here, that's fine. We can correct, maybe ignite that a little bit more. There's still a great bar count at 300 plus. So I'm looking for those extremes to be dollar short. Okay. All right. Sounds good, Marty. Thanks. All right, everybody. Thanks a lot. Thanks for the thumbs up. Thanks for subscribing. I'll see you in class. And next week we'll be back again, 9 o'clock a.m. Eastern time for the Pulver Report Mondays and Fridays. And I don't know, we might sprinkle in a bonus session, maybe Thursday. Well, just join my flex room. I'll do it normal time for the flex room. I was gonna see if we could sprinkle this in, but this worked out this week. A little bonus session for FOMC, bonus session non-farm payroll, good stuff. Doge, yeah, I saw some Bitcoin alerts going off. I had like Algo, Solana, a lot of those alerts going off. Bitcoin, let's check that really quickly before we go. Bitcoin, nice little rally at 20,800. So it's holding the structure. We said when we broke here, so breakout, looking for a bull flag. There's room to run in Bitcoin back up towards around 22. 22 could easily become 25. 25 could also gain momentum up to 28. So I'm telling you, if we see a weaker dollar, if we see the 2-year yields dropping, there is hope. There is hope for a risk on rally. Now, I'm not saying that's the trade. I mean, I'm still holding Bitcoin from like $4,000 and holding more at levels in, but I'm just playing with house money on crypto right now. But where do I see the technicals in the near term? I mean, Ethereum at 1,000 going to 2,000. I think Bitcoin here at 21. We can go to 23. We can go to 25. That momentum could maybe surprise everyone to the upside here at 28, and possibly, if we're going to talk about putting in a big bottoming pattern, it would be here. If we rally back up here to these highs at 32, then this to me is a monster bottoming pattern. And so I would look at accumulating more if we get any pullbacks. But again, there's a long ways to go that price has to prove it. So, exposure on crypto is great. Have some mining companies, have some GBTC. There's ways to trade it. Coinbase got beat up with some terrible earnings, but hopefully they bounce right back. We're up a few bucks on Coinbase, so we'll look at that one today in class. But unfortunately, that was a big miss. But if we have some risk appetite, then Coinbase turns around. We probably get back towards 75 bucks. So, yep, a lot of this, yeah, Craig said it. A lot of it depends on the DXY. You're absolutely right. And that is the one thing that's super dumb about this market right now is everything depends on the 2-year yield and everything depends on the dollar index. So I don't love it. Like so much is tied to it, so much is pegged to it, and the entire stock market is going to hinge on whether this dollar gets weaker or the yields start to come down. And we have a midterm election next week and CPI. So guess what? If CPI data is higher than expected, do not expect the stock market to rally. I don't expect it to. I would expect the dollar to get love again, and this just safe haven nonsense continues. But yes, it will depend on the DXY and those 2-year yields. All right, traders, I'll let you go. See you Monday. Have a great weekend. Those of you in class with me at 10 o'clock for Equities on Demand or 1 o'clock for Masterflex, see you then. Thanks, everybody. Bye.